Hey traders and investors, welcome back to another exciting market update from Investing Advisors. The bulls are back in action as Indian indices surged to new highs. Nifty and Sensex saw massive gains while global markets traded mixed. Let's break down Friday's market action and see what's driving this rally and way forward for next week 21st April trading session. We had seen a relief rally in Indian indices. Nifty skyrocketed 414 points, roughly 1.77%. Whereas Sensex surged 1508 points, around 1.96%. There has been a massive rebound. Sectoral indices too saw buying spree. Private banks gained 2.23%. There was big gain in HDFC, ICICI and Kotak banks. Their quarterly results were declared today and both HDFC and ICICI Bank had phenomenal profits. Infrastructure also gained 1.79%. L&T, Ultratech were in focus. Consumption stocks too rebounded with 1.43% rally. FMCG stocks shined here. Oil and gas sector too rallied with 1.23% gains. Reliance ONGC drove the major runway on oil and gas sector. Global markets were mixed. On the US front, Dow Jones fell 1.33%. S&P and Nasdaq were flat. On the European markets, DAX and CAC were down roughly around 0.5%, whereas FTSE remained flat. On the Asian markets, Nikkei was up 1%, Hang Seng jumped around 1.5%, whereas Shanghai remained flat. Now let's understand from the perspective of charts how the markets are expected to move for the coming week. So we are in the Nifty chart. As you had seen on Friday, there was a big rally that had seen, and we are almost towards the previous resistance of around 23,800 what we had. So it had already closed above that level. So no doubt about it that from Monday again we are going to see big rebound that is expected to come. Since there was a strong buying that was seen for almost a week at the lower levels, somewhere around 21,800. From there, since now, so there have been almost like 2,000 point rally straight in just 6 to 7 trading sessions. And this talks a lot about the potential, further gains that Nifty as an index is expected to perform. So we immediately have the resistance at around 24,200 odd levels, and post that we will have the bigger resistance at 24,700 to 800 levels. So if there are no negative news that are expected to come in, then the way how we have performed massively in just three trading sessions, or maybe 2000 points in just hardly 7 to 8 trading sessions, similar rally could be expected even here for roughly around 1000 points. So this might be we might be able to achieve this rally just in a week's time, or since this is like a third time that we are going to hit the resistance. In fact, we had closed tad above the resistance, but yes, on Monday, if all the world markets remain positive, we again would rally maybe around roughly 0.5 to 1 odd percent on Nifty. So considering that we have on Tuesday Sensex weekly expiry, and then Thursday again the monthly expiry for Nifty. So considering that there have been a lot of positives already that are priced in, maybe we might trade range bound in this range, or we might suddenly surge until 24,800 odd levels, and then trade range bound within this 400 points from 24,800 to 24,000 levels, because this resistance, it is going to be difficult for Nifty to immediately cross, provided all the positive news have already been priced in. So maybe we would trade in this range from around 23,800 to 24,800 odd levels for a week or 2 weeks time, and post that if no major market news from global is going to come in, then we might further start rallying upwards. So maybe our expectation is somewhere until June end we should be in a position to reach our 52-week high where previously we were trading at. So let's now understand from the perspective of open interest. So as Nifty rallied towards the higher levels, we saw there have been big um, unwinding in the call strikes or maybe the call positions. So as you could see at all the levels, somewhere around 23,300, 500, 700, 800, and even for 24,000 levels, we see there have been unwinding in the open interest on the call side. So call writers are surely fearing that there might be a further massive rally that can come in and easily cross 24,000 and above levels. That is when you only see the call open interest being built at 24,500, which is quite far from these levels, somewhere around 650 odd levels, and then again at 25,000. But the surprising point here is at every higher level you see there have been put writing also which has started already. So this shows that over a period of time we would be seeing a big candle or maybe bar that would be raised with the massive open interest positions or additions that happen at these levels too. So within maybe a week or 2 weeks time there are high possibilities that we might significantly move up and then maybe trade in a range bound in this entire range around 23,800 odd levels till 24,800 to 25,000 levels. So we might trade for a longer period of time in this range, and then we might see a further breakout happening at the higher level reaching towards 26,400 odd levels. So from the PCR front, it is quite bullish and positive overall 1.1, and at the money is as well 0.81. So overall there is at 23,500 levels good support coming in by the put writers, and it is very difficult now to fall below 23,500 levels, at least for the 24th April expiry. So maybe it would be expected to see as range bound trades between 23,800 odd levels to 24,500, or maybe we might see a sudden jump as I had already mentioned. Now let's talk from the perspective of Sensex. Even Sensex is at its crucial level of 78,500 to 800 odd levels. So this is where we had given a reversal twice. Now this is the third time that we are inching towards these levels, and no doubt about it that this time it is going to be a bounce back from 78,500 odd levels to 78,800. So there is a immediate resistance at 80,000 that we will have first resistance, and above that at 82,000 we will have the second resistance. So similarly Nifty had also performed. We have like two resistance. So after Sensex crossing these levels to around 80,000, we might see a swift rally again approaching towards 82,000, and then from there on we might see a range bound kind of scenario traded between 82,000 to 79,000 levels. So in this 3,000 points gap we would see a massive time being spent. So now there have already been a lot of volatility both on the downside as well as on the upside. So now we might see some low volatility or consolidation happening between these levels, and then both Nifty and Sensex might spend a good amount of time, roughly around like 3 to 4 weeks, and then we might again see massive positions being built on the bull side, taking Sensex to the higher highs and crossing the 52-week levels. So once it crosses maybe 86,000 levels, then we might start expecting Sensex to again bounce back and go at the higher levels towards 89,000 and above. So until maybe May to June, we might still trade in this range. When the final announcement from the US or Trump on the tariffs, uh, when all these things surfaces out, then we would be seeing a big rally post that particular situation. So let's wait and watch maybe in this 2 months how the markets are expected to perform. But yes, overall we can say that there is bottom already that has been made at these levels, and then we are going to rebound from present 78,500 odd levels. Now let's look from the perspective of open interest. So on the open interest, since it is a 22nd April expiry, maybe from Monday we would see some sharp open interest positions being taken. So we already see massive positions being built at 78,000 watt levels. So there is very low chance for Sensex to break below 78,000 levels. So now if you see on the higher side too, at 79,000 we do not have much of the open interest positions. Similarly at 79,500 levels too. So massive open interest is being built on the call side is only at 80,000 levels, and this could be carried forward maybe from the monthly additions to monthly position additions to. But however, if you see somewhere around 40% of open interest at 80,000 levels just has come on Friday. So somewhere the call writers believe that they will be in a position to put pressure on Sensex and not let the put writers cross above 80,000 levels. So looking at the open interest as of now, 80,000 shows strong support. However, if massive rallies start again similarly like how we have seen on Friday, then in no time we would see a spike in the put writing coming in at all the 500 every 500 or round levels beyond 79,000. So Sensex, we have to wait and watch because there have been no much unwinding that has been seen. Only at the very low levels around 77,000, and maybe from 77,000 to 78,000 levels we have been seeing unwinding. But however, at all the higher levels beyond 79,000, we see good open interest additions that are seen on the call side. So on PCR front, overall it is quite positive 1.4%, whereas on the at the money 0.73, it is maybe mildly neutral to bullish. Now from the perspective of Bank Nifty. So Bank Nifty is just 250 points away from its 52-week high. So we have seen a massive rally in just 7-8 trading sessions, and all the banking stocks, both private as well as public banks, have been doing really well, and there have been good positions that are being built at lower levels on the banking stocks. So now it is just a matter of time, a day's trading session, for Bank Nifty to cross its 52-week high around 52,500, 54,500 odd levels, which we had previously seen. So now what is expected on Bank Nifty? Same like how maybe FINNIFTY had performed, and since all the banking stocks have been really doing well, the results on the banks have been quite positive. So there are a lot of positive news on banking stocks. So no doubt about it that banking sector is going to be positive, and there have been a good sector rotation from IT stocks to the banking stocks. So we might see a good rally coming in maybe in a week or 2 weeks time in all the banking stocks, and that could lead a Bank Nifty to its to the higher levels, crossing 55,000 in the initial stage, and then 56,000 at a later point in time, maybe by end of April month or first 2 weeks of May month. So some good momentum seen on all the banking stocks. So it is better to trade majorly on the banking stocks on the higher levels and positive note, because banks have been the fastest to recover and move at the 52-week high levels and go beyond further from here on. So we are quite positive on all the banking stocks. So whatever banks have been performing well, like Kotak, ICICI, and HDFC Bank, we can continue taking positions in these banks for positive momentum. Now let's talk from the perspective of open interest. So as you could already see, below 54,000 levels, we have been seeing good unwinding of positions on the call side. So it is very evident that all the call writers would massively be facing losses with the positions held, because Bank Nifty expiry is expected happen above 54,500 levels itself. So we have seen at 55,000 levels some call additions that has happened. So as of now, looking at the open interest positions, it seems that 55,000 could be reachable but may not be crossing. So Bank Nifty could trade in the range of 1000 points from 54,000 levels to 55,000 levels for 24th April expiry, which is just 4 days away. Maybe for the next weekly expiry, next monthly expiry on Bank Nifty, we might see a lot of positive news coming in, and then we might easily cross 55,000 and 56,000 levels too. So our analysis suggests that maybe in a month's time, by the end of May itself, we might approach towards 57,000 on Bank Nifty, and then maybe we might see that consolidation in the range of 3,000 to 4,000 points odd from 57,000 levels to 53,000 levels. So in this range we might trade for another 1 month until June, and then when the tariffs news subsides, then we might get some clear indication as to how the world markets are expected to move, and where do we approach. So majorly all the world markets have also recovered and have been doing well. So we might see a lot of positivity coming in typically on the Indian indices, because there have been massive buying from even the FIIs that are being seen at each weekly maybe expiries, or on daily basis also. If you have been seeing from last 3 to 4 days, there have been massive buying, almost like twice the amount of what DIAs have been selling, they have been absorbing. So majorly FIAs hold, or they like the banking sector, because majority of their holdings or positions are on the banking stocks. So the first rally or the first mover advantage that any stocks are going to get is the banking stocks. So keep an eye on the banking stocks as long as FIIs remain positive. On the PCR front, it is 1.3 overall and 0.68. So overall it is positive, but on at the money it is maybe mildly bullish to neutral. Now lastly on FINNIFTY, so we had discussed yesterday itself that FINNIFTY would already be moving higher levels towards the 26,000 levels, but we did not expect that it would just achieve that in a single trading session. So we have seen a massive spike in the rally on the financial services sector. So this might continue moving further until 28,000 levels by the end of May month. So as we already discussed, banking stocks have been positively performing, and so is NBFCs. So there would be good interest, buying interest, that would be seen both in the financial services sector and the banking stocks. So as long as the quarterly results remain positive for the financial services indices, or maybe sectors, sorry, stocks, till then we might remain positive and go long on financial services index. Maybe the immediate stop could be at 25,500 odd levels, where we saw the immediate resistance. So now this would act as a support for us, and then markets might inch higher, FINNIFTY can inch higher, and then this would be the place where it would take support and then further rebound. So we do not expect the support could be touched immediately. We might consolidate for some time, yeah, both by end of this month until May month expiry, and then post that we might see a further rally above 27,000 to 8,000, 28,000 levels. So let's now talk from the perspective of open interest. So open interest seems to be a lot skewed here. So if you see at 26,000 levels, there have been good positions that have been built. Again at 26,500 levels, on the call side there have been massive positions that are being held. So looking at these open interest positions, it seems to be little difficult for FINNIFTY to decisively cross or maintain 26,000 levels and above. Maybe it is only 4 days to expiry. If all the other banking stocks support, then we might see FINNIFTY approaching 26,500 levels, at least for the monthly expiry, and then it can hover and trade in this range from 26,000 to 26,500 odd levels, or maybe can fall below 25,500 odd levels too. So this 1,000 point range is going to be a consolidation zone for FINNIFTY. So we have a strong support at 25,000 odd levels, a massive put writers that have been holding this position, and then on the higher side we have at 26,500 and 26,000 levels. So from the perspective of this monthly expiry, it is evident that we might trade in this zone, or maybe close below 26,000, or trade in the range of 26,000 below 26,500 levels. So this 500 points is going to be significant for FINNIFTY. Overall PCR again is positive 1.2, and at the money it is 0.68, which is mild bullish to neutral. Lastly, we will talk from the perspective of how the FIIs and DIIs have participated. So on the index futures, they are short by 83,273 positions. Uh, some short positions have been built on index futures. On stock futures, they are massively long and bullish with 17.5 lakh contracts. On call options, they are long by 2.3 lakh contracts. On put options, again they are long by 2.57 lakh contracts. So overall net they are short by 27,000 positions. Not significant though. On the proprietary trader side, on index futures, they are 11,077 contracts short, which is indecisive. On stock futures, they are long by 1.8 lakh contracts, which is mildly bullish. On call options, they are long by 47,000 contracts, and on put options, they are short by 88,000 contracts. So net they are quite bullish on index options by 1.36 lakh contracts. On retail traders or clients, on index futures they are long by 16,261 contracts. On stock futures they are massively long by 17.57 lakh contracts. On call options they are hugely short by 2.77 lakh contracts, and on put options again they are short by 2.18 lakh contracts. So net retail traders are short by 58,000 contracts. So somewhere again maybe the retail traders might take a hit because proprietary traders are long and FIIs are not hugely short. So somewhere the hit or impact could be on retailers. Maybe we might see a good rally next week, or if it trades range bound, then no much impact for the retail traders too. But overall, looking at the positivity that we had seen last week, that positivity might continue even on the monthly expiry too. But the other way to look at it is, since already the rally had happened, maybe we might consolidate or stay put at these levels. Now let's talk from the perspective of cash positions. The domestic institutional investors had sold for 6 crores in cash market. However, FIIs have been hugely positive. They have bought 4,668 crores. So this is a massive buying. So as long as FIIs continue to buy, we have to be long. So either of these two institutional traders has to be long. Uh, so last week maybe we had seen DIIs were massively bullish, and now it is FIIs who have been bullish. So we already discussed that FIIs have been massive sellers for almost like 2 to 3 months odd. Now FIIs have been turning buyers after the 4 to 5 months outflow. So there could be a good buying that could happen provided there is good earnings optimism and strong Q4 results, which might change the sentiments, and this could boost the markets to further move up. And since we already discussed, there have been a good sector rotation that has happened from IT indices to banking indices, and slightly to the reality or infrastructure sector. So we might see good buying that are expected to happen on these indices. So as long as FIIs remain positive, their primary bet would be on banking stocks. So it is always good to hold banking stocks and take long positions in these stocks and continue the ride until the tide turns. So maybe on the global cues, we have already started stabilizing. So until the Fed rate cut happens, the market might remain choppy, typically the US market, and post that it might give a clear direction for the world markets to move on. So as long as there are no major challenges, issues that we see, the markets are expected to continue range bound and trade higher. But from these levels, there are very low probability or chances of markets to further sharply fall down. So we might take neutral positions on options or neutral to bullish positions, which will help you to gain profits for the next week and in the subsequent week of the April month too. So overall, yes, the market momentum is strong, but stay cautious near the resistance levels. Also keep an eye on the global cues and earnings. So if you found this video helpful, smash the like button and subscribe for our daily updates. Thank you.